This is Special Focus right here on Equity Access, your daily insight on stock market developments and on developments in the Zimbabwean economy. A beautiful evening it is to you. I'm Ibn Mabunda. Let's roll. On agenda tonight, gold deliveries for the month of January have been released by Fidelity Printers. Here's a quick look at what transpired. Gold deliveries for the month of January dropped 35% to 1.7 tons from 2.5 tons recorded the same period the previous year. Of note is that this is a 6% growth from December, however a 39% decline from the monthly average of 2.9 tons recorded throughout the year 2018. The Ministry of Mines and Minerals Development has set a target of 40 tons for the year 2019. Now, if we look at the way that things are going, this does not spell positives. Well, if we're to look at the manner in which we have progressed over the years, well, in the year 2016, we recorded 23.2 tons, 2017, 25.3, 2018, 33.2. Well, that target of 40 tons for the year 2019 seems very much elusive. Well, of course, issues there have to do with miners' dissatisfaction with the parity that government has set between the local surrogate currency, the bond, and of course the US dollar in that regard, against a 55% retention. But again, why is gold exports important for Zimbabwe? Gold is Zimbabwe's largest foreign currency earner. In the year 2018, it ranked 28% of our export values to $1.2 billion, up 20% from $1 billion in the year 2017. So that attempt to have it at 40% is an effort to beef up our export values and get us from the current quagmire that we have at a trade deficit of $2.5 billion for the year 2018. Well, as we progress, of course, we have another issue to look at in that regard. Afreximbank has availed letters of credit worth $255 million to Zimbabwe. The line of credit is supposed to work as a revolving fund. What that means is the funds are replenished as withdrawals are made over a period of 3 years. Or the credit facility will facilitate imports of fuel as well as basic commodities in the economy. This comes as a huge sigh of relief for Zimbabwe because of prevailing or waning lender confidence from the international community. Well, as evidenced by December's failed attempt to acquire a debt worth $1.2 billion from South Africa. It would also be important to note that in the year 2018, Zimbabwe was able to source credit worth over $800 million from regional banks as well as international banks. So the fact that we've just been able to secure that 255 comes as a positive, as Zimbabwe is currently suffering from a lack of foreign currency. Still on the table with Afreximbank is a credit facility worth $1 billion according to reports, but it remains to be seen if there would be any positives to materialize in as far as that is concerned. RBZ releases November figures, and data by central bank shows that Zimbabwe has drastically reduced its usage of electronic payment facilities in favor of cash. A quick look at the stats would reveal that a report by the central bank would reveal that transfers came off 16% to $477.4 million, which is the lowest in 20 months. As well, mobile transactions have recorded a 14% plunge to $3.96 billion in November, the lowest in 5 months, while cash demand has increased as evidenced by withdrawals going up 11% to $19.9 million. Now, Johannesburg Stock Exchange listed Anglo-American Platinum, which wholly owns Unki Mine in Shurubi, says it expects a twofold rise in as far as its annual profits are concerned. This, it said, in a prelude to the 2018 financials, which are due to be released on the 18th of February 2019. Revenue is expected to scale between 83% to 103%, spurred by strengthening prices of its commodities as well as improved performance by the group in that regard. Unki Mine is one of Zimbabwe's largest platinum reserves, which are estimated to be over 30 million oz of platinum. Their current production at the moment is 64,000 oz annually. Of note is that Amplats has invested $62 million in a smelter which is complete and awaits commissioning later on in the year. Well, this of course should improve the processing of the platinum and of course enhance our export value in that regard. Of note also is the fact that Zimbabwe is home to the world's second largest platinum reserves, just behind South Africa. For a conversation on these and other issues, I'm joined in studio by our resident chief analyst, Respect Gwenzi. Respect, good evening and welcome to the platform.
Thank you, my pleasure.
Splendid. Let's cut to the chase. Gold deliveries for the month of January are out, and there is a drop of 35% on a month-on-month basis. Well, in the month January 2019, we have 1.7 tons against 2.6 tons. Then, given that the Minister of Mines wants to hit a 40-ton target for the year 2019, what do you think will play out, or what does this mean, given what we have at hand?
Yeah, the Q4 outturn in terms of gold deliveries, on average, we were looking at 1.7 tons per month, coming from an average of about 2.6 on a 2018 level. That alone was a red flag to point to the fact that we are not likely to enjoy a safer 2019 in terms of increased tonnage. So clearly, it's not a surprise that we are starting the year on a low. 1.7 is a far cry from 3.1 tons that we achieved from January to September of 2018. That was the average. So it's not a surprise, but also it's important for us to highlight what are some of the drivers that has led us to incur such low levels of production. So what's happening in the economy is that miners are offered 55% in terms of their export receipts, right, as they are allowed to retain only 55% in hard currency. The difference is given in local money terms. So when rates started going up in terms of the exchange rate, it became clear that miners were losing out, because the difference, which is about 45%, they were getting it in local money, which now is only 25% of what it used to be a few months back. So miners felt shortchanged. They felt that it wasn't right for government to be retaining that 45%, which in effect was not 45%, it was even more, because some even were getting only 15% from their exports in terms of actual money. So they started scaling back in terms of production, and they also started searching for other means to earn real dollars, and that meant taking their produce outside the country in other unorthodox manners, and also some were understating their values. So this became the dynamics around Q4 of 2018, as can be seen here. October through to December, volumes coming off, notably in November. Okay. So this has still been the trend, but it all points to one thing: the currency is not working. Why so? Because it's leading to a reduction in production. When production becomes this low, what it means is net earnings to the economy also come down. So GDP is going to be affected, because the mining sector is a big contributor to our GDP. Around 10%, between 10 and 15% of our GDP comes from minerals. And when you then look at the real USD value, it even possibly accounts for more, a higher share, because we are saying minerals are sold in USD terms, whereas other produce might be valued in local money terms. Minerals are valued in USD terms, so they might be contributing far much more to the fiscus, to the national produce, than we see on the national books. So clearly,
you inadvertently mentioned the fiscus there. what then would be the ultimate effect in terms of the fiscus? The finance minister has been advocating for a fiscus rebalancing. With the way things are going, do you think that that would still be achievable?
This is a precursor of what's happening elsewhere. It's an indication of what's happening broadly across industry. Okay. Volumes are coming off. Why? Because there is no longer operational viability across a number of operations. Not only mining. If you go into real producers such as Delta and some who are in similar activities, they are failing to access forex. Why are they failing to access forex when they have got some balances sitting on their books? It's because of a failed currency. When you have a failed currency, you subsidize, you try to rob A to pay B, and in trying to do that rebalancing, you won't have efficiency, you won't have efficient allocation of resources. So in terms of the question that you asked, what's going to be the impact on the fiscus? We are about to see a sharp decline in terms of our national produce. Not only in one mineral or two minerals, but right across industry. Why? Because industry is starved of the hard currency to facilitate their trade. And we are also going to see a decline in demand as people's income also tumble. So 2019 is not looking like it's going to be a good year for Zimbabwe so far. So this is just an indication in terms of where we are heading if we don't solve the currency problem. And you mentioned that we have targeted 40 tons per
for the year 2019.
Yes, coming from 33.2 as short.
Correct.
So using an average of 1.7 tons that has been achieved in January, it's now also very clear that we are likely to come off by at least 30% in terms of our annual produce using the 1.7 that has been achieved now. In fact, that was also the Q4 average, 1.7 tons. So if you are to say we'll hold that tonnage throughout the year, then we'll be off against the prior year. Because in the prior year, we had an average of about 2.6 for the whole year. Right. And then we achieved 33.2. So a target of 40 tons cannot be achieved under the current circumstances. We have the capacity, but we don't.
Suppose government were to revise it upward, what could we see? So suppose they increase it to say 80 or 90%.
This is not about increasing the retention rate. It's about correcting the fundamentals in terms of shifting the currency.
Okay.
They don't want piecemeal benefits. They want to be entirely allocated their money, and they want to be able to sell their money to a local on a fair market principle basis, which is a willing buyer, willing seller, and you look at the fundamentals to say what's the demand, what's the supply. So if you are to then be given another rate, a higher rate, and further tumbling in terms of the local prices and local currency, it means they'll still feel the same. I wouldn't have a clear rate to say maybe if they're given 80 or 90. Okay. I just feel that we have to correct our fundamentals, and those fundamentals include shifting the fiscal leg, and that might solve this problem.
Okay. Progressing. Anglo-American gives us a prelude into what we could possibly be getting into in as far as the 2018 financials are concerned. Well, they've said that revenue is expected to scale between 83% and 103%. What is the significance of that, especially considering that Unki is a constituent contributor to their financials?
Yeah. Unki per se has been performing well, but if you're doing a like for like in terms of Q4 17 and Q4 18, you realize that we are up. On the net, we're up in terms of production, both in palladium and also in platinum, double-digit margins. But then when you look at on a quarter-on-quarter basis, that is Q3 18 and Q4 18, we saw a sharp decline we saw it's a marginal decline. Right. And I think if you were tracking the Zimplats financials as well, you would find that the same was also true. This year compared to last year, we were up. I mean Q4 for Q1 of Zimplats compared to Q1 Zimplats 2017, okay. 2018, which falls in the 2017 year. Okay. It was up. The performance for Q1 19 was up. Okay. when you also look at Unki, Q4 performance up compared to Q4 17 performance.
Right.
But when you look on a quarter-on-quarter basis, both incurred a slight slump in production.
Okay.
So I think it's also fundamental given what's happening locally in terms of general output, general produce. Almost all minerals recorded a decline in terms of tonnage.
Okay.
Be it platinum, be it nickel. If you're looking at the export numbers, they will show you that there was a slight slump in production around Q4 levels of last year. And that might speak to this whole fundamental issues. Safe to say prices have generally stabilized, except for maybe platinum, which has not been as strong in terms of the global markets. But some metals like gold, they've been holding forth. Of course, the dollar has been firm such that it has been affecting the strength of gold. But generally, minerals have not been as bad in 2018. So we were supposed not to see a decline. But if you're looking on a quarter-on-quarter, which is this chart, it will show you that Unki is 20 Q3. We are looking at 22.4 to 22 and 19.7 to 19.6. Okay. And also the PGM aggregated coming from 50.4. That's slight, but it's significant. Why? Because all this while from Q1, we were realizing a growth month on month coming from 45, 46, 50, and then that slight slump. It might not be significant. Why? Because what Unki does is to take the ore to South Africa, and then the parent smelts the ore. So it might be very difficult for them to really understate production or even try to play games around their produce, because it's smelted outside, and they can only realize their full value once it's smelted that side. But I think the other dynamic around Unki is that to do with the smelter.
Right.
I believe this is going to be a game changer. I feel that there's a lot of value that's lost in four E metals. Why? Because you are allowed to take your ore outside Zimbabwe. You only process it outside, and you start to give a report backwards to say, within this ore we had this much of this commodity, and so forth and so forth. I feel there's room for manipulating the figures, and when you're looking at a company like Zimplat's annual revenue of over 600 million in real USD dollars, I believe there's room for manipulation, and those are the minerals that matter. We should protect them. We should be more accountable, and those growth targets that you just mentioned, they're very much achievable given the coming in of a smelter. But all things being equal, I don't see them progressing that far without the smelter in terms of growth in revenue.
When could we expect the smelter to be up and running?
It should be up and running in the current year. It's just waiting to be commissioned. It was supposed to be commissioned in January, but I think it's been deferred to about February. We'll know further details in terms of the smelting capacity and whether it will take third part ore. But I believe that the 4E or the platinum group producers, they've been asked to build a refinery, and so some other players are also beginning to start to do something around that.
Okay. Progressing, we have Afreximbank that has availed letters of credit worth $255 million to Zimbabwe. I think this comes off as a huge relief, considering the fact that Zimbabwe's had a hard time in securing credit to, move the country forward. What is your thoughts where that is concerned?
It's always been said over the past 3 years. Our relationship with Afreximbank is not it's not a secret. They've chipped in where we needed them most. Afreximbank has mainly been involved in offering us facilities, mainly to back the bond note. You remember the 500 million, and yes, also the 200 million in terms of bond coins. And later it got involved in terms of guaranteeing the nostrils, stabilizing the nostrils, and this is where this facility falls. So it might not necessarily be an entire new facility. These are revolving facilities. So you utilize a facility, you pay back, and they give you again back. So it becomes more of a revolving facility. And I think it helps stabilize the situation in Zim, but it comes at a premium. I think it's high time we sort our fundamentals. I think that's all that we need to focus on. But it's needed. We deserve it, but we should be focused more on correcting our fundamentals. Why? Because every facility that you get, it comes at a cost. That's one thing that we have to live with. And why should we be paying that cost? We are paying the cost of failing to live within our means, of failing to balance our books, of failing to balance our export and import position, and we end up paying such a premium. So I think facilities, yes, they should be celebrated because they relieve our problems temporarily, but they also reflect our lack of management or our mismanagement in terms of our own finances as an economy.
So the finance minister is in the right direction, fiscal rebalancing.
Yes, fiscal rebalancing is needed, but you need to know how to rebalance. You need to know what other factors needs to be put in place. You can't you can't just concentrate on consolidating while letting other factors out of hand, because you need to sort out the monetary leg, which has always been what we've been saying all along, to say if you want to correct the problem that Zim has at the present moment, do you need to just concentrate on constraining demand, pushing your taxes? What are the costs involved? I think this is what viewers also need to know, that the way the way the economy works, it's never one-sided. There's always another side to it. Whenever you push taxes, you constrain demand. Whenever you constrain demand, you risk losing production. You risk pushing the economy into a recession. And also, whenever you hike your taxes, you also risk pushing prices up, because it's an additional cost which the person who is running a business will factor into their own production, and they will also push prices up. So it's inflationary. And so I think all these things are not one-sided. Whenever you embark on a certain agenda, you should always know what the cost is. I think it's also clear when you're looking at the relationship between currency and austerity, to say, if you had to achieve austerity, can you do it without a currency? And should the currency, at what point should the currency be? Should it be weaker? Should it be strong? So you need to drive exports to counter for the lack of demand that comes in your own economy when you're under austerity. If you don't do that, that doesn't mean to say if you balance your books, you win. That's exactly the problem that you have right now. We are now balancing the books, but there's inflationary pressure. So you have to have the right mix. So you can't say he's exclusively right. He's partially right, but there are things that is failing to complement his austerity measures. There's need to balance the two. There's need to counter inflation. There is need to not to scare away investors. Just at Davos a few weeks ago, somebody was trying to calculate what's the cost of doing business in Zim. So in as much as you're celebrating that you're getting revenue as the revenue authority, what are you also losing? You are losing a potential 2 billion, or you are losing a potential FDI. Why? Because you have hiked your cost of doing business. So everything in economics should be looked at from a cost-benefit analysis.
I'm still on the same subject. RBZ releases November figures, and it seems apparent that there is a decline in terms of the demand for electronic transfers, and there is actually an upsurge in terms of the withdrawals that have been recorded in that period. Demand for cash, they're going up 11% to 19.9 billion. What is the significance of that, and what could we derive out of such a figure?
Yeah, the statistics are interesting, especially coming from a period where there's a macroeconomic volatility, a bit of shifts in the economics of the country. When you're looking at the broad or the aggregate monies that are transferred at any given period, they are split between the RTGS, mobile money, That's the mobile money transfers, checks, POS, and ATMs. So these are the 5 methods of transferring or moving monies, either when you buy or when you send someone money. So the ZEX, which is the RTGS transfers, it accounts for the significant portion in terms of value of money transferred. So the number is close to about 60% for the ZEX. That's the RTGS platform in terms of value. But in terms of volume, we see mobile money having come through over the years, and it's now the most dominant at almost 80%.
Right.
But in the last 3 months, there's been a notable trend. In fact, in the month of November specifically, we started to see a decline coming from a growth position in terms of the absolute values of monies transferred. So between July and September, between July and October, there was a month-on-month accumulation in terms of growth, in terms of the value that was transferred through the RTGS platform. And in November, we suddenly see a decline.
Right.
The same trend could be noted across all other platforms, the mobile money and all other platforms minus the cash. Withdrawals suddenly spiked. So there was that mismatch to say, why was there a decline in terms of values transferred via all other platforms, and then a gain in terms of the withdrawals? And we could draw a bit of analysis around that. The 2% tax took effect right at the end of October.
Right.
That's when it came into law. So instantly, we started to see an additional cost associated with transferring money via such platforms as the mobile, as well as the electronic, which is the RTGS. But then we started to see people demanding more of cash. And when you see what the market, or the behavior of the market was, people were starting to sell most of their goods in hard currency. So people would withdraw so that they could also buy dollars on the street, and they could now purchase. So the 2% tax had a clear impact in terms of driving the cost of utilizing these platforms. And it definitely led to a decline in terms of the absolute values traded on this.
That being said, what could we expect going forward?
People will not stop transacting. The payoff, I think, on the gain side, we see the minister saying, I've increased my flows by over 300% over the past 2 months just from the money that's earned from mobile money, from what do you call it, money transfer tax.
Yeah, because the minister sounds very much optimistic, and as far as he's concerned, everything is going on well. I read one of his tweets this afternoon where he said, look, we have to take this pain. This pain is essential in pushing Zimbabwe forward.
Yeah, I think a lot of our seniors are quite misguided when it comes to the aspect of pain. It's not a given. Just in general, in life, it's not a given that when you incur pain, so you're supposed to, that's the process of healing. It's not always. Sometimes you can incur pain so that you actually incur even far what's more pain. So I think most of our elders are misguided. I've seen a number of business leaders and so forth who actually believe that the only way up is when you incur pain, but they don't check the nature of the pain. Is it the right drug that you are prescribing?
But the minister is convinced that that's the right pain.
Yes, that's what I'm trying to get to say. A lot of people are misguided. On the onset, we have to agree that it's not always that every pain is the desired pain to get you to where you want to get to. If you are having a wrong mix in terms of the drugs that you are supposed to take to heal, if you probably take one where you're supposed to take two, it doesn't mean to say you will heal. you actually won't heal. So we have to agree as Zimbabweans that this is the right mix of solutions. It's not like everyone is supposed to be happy. It's just like the currency issue. What can be the desired scenario? Everyone wants a US dollar, but is it achievable? Is it the right thing that we might need right now? You will find that maybe it's not. When you are looking at a rational ground to say you are looking at this person's interest and the other end's interest, you may realize that there's need for a compromise. There's need of something beyond a dollar. So I think that policymakers, business leaders, they're getting it wrong. It's the right mix of your tablets or whatever it is that you use to solve your problem that needs to be made right. So for him, I believe he's lacking in terms of the monetary leg. I don't believe you can sustainably contain your fiscus if you're not managing inflation. It's a given. And is he managing inflation? He thinks he is, but then you gotta see the January figures. They will be out in just 14 days. Inflation is up again. So you cannot live a lie sustainably. At some point you come to realize that no, I need to close this gap. And I think we have now reached that point where everyone agrees that it's no longer sustainable to just focus on the fiscus. It's actually sustainable to look at the currency issue to solve the monetary leg concurrently.
Right.
That then becomes possibly what I feel might be the right mix.
Okay, well, that's it for the show. Respect, thank you for the insights. Thank you, viewers, for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. Up next is Anisu Chumbumu with Money Markets. Stay tuned.
Good evening, Zimbabwe. My name is Anis Chimbumo. As usual, I do give you the stock market updates, and today I'll be joined by our resident chief analyst, Respect Gwenzi, to just talk about what happened on the stock market today. Respect, how are you doing today?
I'm doing good.
Good.
Thanks.
All right. Just to have a quick recap on what happened on the local bourse today, can you just give me a slight snippet of really what transpired?
So on Thursday, the stock market went up by 0.07%, coming up against a sharp decline in yesterday's session, which was the midweek session. But generally, we have been seeing the stock market going up in the past weeks. It's only just last week when it came off a bit, and I think it was a lot to do with rebalancing of the books as we as the stock market went towards the month end. But lately there's been so much upside pressure, which has been driven by fundamentals, issues to do with current uncertainties, the delay in the monetary policy as well. It has resulted in risk aversion by investors because no one knows what's going to come on board. But specifically in today's session, leading the risers were heavy caps, Padenga, and we also saw Delta coming up as well, and Deribod, which had a tour yesterday with the parliamentary committee, also featured among the risers. But generally, in terms of market breadth, there were more fallers than there were risers in today's session. But generally, the market went up.
All right. I do understand some of the counters that you mentioned, Padenga and Delta, are actually Old Mutual. Actually, are one of the leading counters on the local bourse on a year-to-date basis. Sure. I think I would like to get a perspective more deeper than what I think, which is that people are flocking towards those kind of stocks more to do with them being on an international relationship in terms of them being able to source US dollars and the like from their operations, specifically with Padenga being able to only actually dealing with exports in terms of their crocodile skin and alligator skins. Is there more reason for them to be flocking that in that direction?
Yeah, so There is a general risk aversion in the stock market. What we mean is that people are generally getting into stocks to hedge themselves against weakening macroeconomic fundamentals.
yes.
So when you look at some of the counters that are some of the top rising counters on a year-to-date basis, they also include Padenga and Old Mutual. Padenga is a company which sells crocodile skin,
Yes.
and most of this skin is sold to European markets
Yes.
and a bit of the
Americans. Yes.
America market as
Yes.
well. So basically, they earn exclusively in USD.
In US dollars,
So investors find themselves at ease investing in such a counter, even
yes.
though it might mean that the counter is overvalued.
Yes.
But it's safer putting your money where you know you're guaranteed of your forex income. That's the reason why Padenga is rising. When you look at Old Mutual is a fungible counter. A fungible counter is a counter that's traded in at least two more markets.
Yes.
So in Old Mutual is primarily listed on the JSE.
Yes.
So we have seen investors flocking into Old Mutual. Why? Because it has exposure beyond the local market.
Yes.
It's Old Mutual Limited, which is the restructured unit, includes African operations, which are plus Zimbabwe, which are outside of Zimbabwe, but plus Zimbabwe as well. So investors feel that they are safer putting their money into operations that are not exclusively in Zimbabwe. This is why Old Mutual has been rising, and so that's how people come up with an Old Mutual implied rate, which is an exchange rate that's derived from seeing by how much Old Mutual, which is listed locally, is up compared to the same Old Mutual share which is listed elsewhere. Lately, it's been the JSE. So we are seeing a fungibility of over 500%, and so people use that as an exchange rate as well. So that's why we have seen a movement towards these counters. But if you are to look at some of the heavy caps, I think about 7 heavy caps are up on a year-to-date basis, and that's because in such an environment, you don't just get into stocks. You get into selective stocks which can preserve your value.
Yes.
And most of these value-preserving counters are mainly the top 10 counters. Why? Because their operations are assumed to be strong. They operate in mature markets. Therefore, no matter what might happen in the environment right now, they might be able to withstand the pressure that may come from weak economics. So I think on a year-to-date basis, we've got counters upwards of 35, which are up on a year-to-date basis, and just about 12 counters which are down on a year-to-date basis. So generally, we've been up and in line with the region. I think the region is on average about 5% up.
All right.
Yeah.
Well, that's fine. And I suppose the 0.33% decline on a week-to-date basis for the ZEC top 10 is much to do with what you had mentioned earlier on with the rebalancing of books coming into the last weeks of the month. But then one of interest for me is the mining's index, 1.56% ahead. Yet the index is beginning to become more thin, as Falgood was also suspended the other day. So that means we are left with about 2 counters, if I'm not mistaken.
It's actually 3 counters,
okay.
And the heavier one of them all being Bindura,
okay.
And I think followed by Riosin. So I think what happens is whenever you have a few number of counters, if one counter moves, it's likely to impact more on the index, and especially if it's the most weighty. So whenever the weighty counter among the few counters that are there moves, then the general market and the general index also moves. So lately, I think we have seen Falgood being suspended, and the remaining counters, those are the ones that are pushing the mining either side. But generally, it has been stable. I think you can see that it's just
it's been pretty much flat
the
for the
movements.
last 2 days.
Sure.
Yes.
So that's been about the mining index.
All right. Well, ladies and gentlemen, that's it from me in respect on the stock market today. Please do have a good evening.